we may say something and then a week later it could be totally different. And you have to, as a trader, adapt. If you don't adapt, you're done. You will lose all your money. I think it's important for investors to know that within every bear move, there's multiple bull moves and vice versa, right? So again, you have to define what kind of trader you are. Are you someone who just looks at it where Bitcoin's going to be in 10 or 15 or 20 years? Or are you someone who wants to play the highs and the lows on the moves multiple times? And that's kind of where I am. And it always drives me nuts because people, back when we were at 65,000 in 2021, I was like, you know what? This kind of looks like the dot-coms. We might go down to 20,000 or sub. And since then, a lot of people are like, oh, he's the 20,000 guy. He's such a bear, all this. And meanwhile, I've been trading the lows and buying, and I've been selling and shorting and making so much money. So people need to understand that there are going to be moves in each direction, but there's so many trading opportunities in between. Basically, the amazing thing about the charts is they give us kind of a basis to make decisions, right? So what I found is that if you connect this low here and this low here, these two little tails, and you stretch a perfectly parallel line out, you got this high, and it gave us this exact high as well, which is where Bitcoin stopped in the near term after having multiple days up. I mean, I think it was 7 or 8 days straight up, and then it needed to pause and pull back. And what's amazing, if you throw your 200 moving average on there, it's also right at the 200. So what I tell people in technical analysis world is whenever you have one level, if it was just the trend line, well, that's good resistance. But if you have two, I mean, imagine two brick walls back to back, and your job is to break through that. That's a lot of work. It takes some time to do that. So having a retrace like this is very, very normal. It's somewhat on the healthier side. When we look at where we pulled back to, look at this. So you see this kind of trend line right through here, and you can see right through this pivot, this, and right here, price went right there. That was your first support, and you've seen a little bit of a bounce off of it. Now you're talking potentially going down to 42,000, which is another technical level. So you're definitely looking at your charts there, Wendy. And you can see right here would be your next support. So if we do break through this 45, 44, 4.5 level, then your next spot would be right around 42 to see if it holds. Well, this happened back in 2021 in May and June before we ran up to 69,000, right? So if I zoom out on the chart, you can see here, there is a slight difference that is worth mentioning here. All right, this is an upsloping channel. If you look at this and you connect these pivots, this is a downsloping channel, all right? So you can see the highs here, 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 and then we actually broke above and retraced there, and then all these lows kind of coincide. The thing that in technical analysis, if you were to look at 1,000 of these type of charts, the probabilities dictate a breakup. If you were to look at 1,000 of a slightly inclining channel like this, the majority of them, and again, we're talking 70, 80%. So I mean, there's still a chance that it doesn't break to the downside. So as of now, that's something I'm paying attention to. It doesn't mean it's going to happen. There's no guarantees in trading, as we all know. What would change my mind if we could get above this area and really hold there for, let's say, a few days, maybe 3, 4, 5, 6, 7 days, then I would say, okay, this bearish channel is no longer in play, and I would start to get more on the bullish side. But right now, it makes me nervous. I mean, this pattern, I mean, I've looked at a million textbooks. I've traded for 20 years. It kind of makes me a little nervous that this pattern is still holding even with this latest move up.
Basically, when we look at this, would this be classified as a double top on the monthly?
Yeah, it would. It would be considered, yeah.
And will you tell the audience what that means?
Double tops basically are bearish formations. And I think the best way to put it is that when a chart makes a run up like that first M, the first part of the M right there, the bulls get rejected and then they do it again. And when they fail again, it's really gut wrenching for them. And psychologically, it hurts. And that's what creates that next wave, usually more selling to the downside. But essentially, psychologically, they try and they try. I mean, think of a military battle where every time you go against your enemy, you just get smacked down. Eventually, you're like, forget about this. I'm going the other way, you know? Yeah. And I was just going to bring up this chart of the same chart you had up right here, except the problem is it's not the same chart, right? But look at the formation, Wendy. This is the monthly chart of Amazon back in the .com bubble. And I just think again, there's no guarantees that things are playing out this way, but you just have to chuckle at like the similarities in that chart to what you just showed on your monthly chart of Bitcoin in terms of the M top, you know? And again, like we say, there's no guarantees that you're having this .com bust, but I would throw that back at you, Wendy, and say, you know, what do you think happens in terms of, you know, you have so much junk out there, or do you agree that there's a lot of coins that are kind of junk out there?
There's so much trash out there, and this also goes with the NFT space. Like, I love NFTs because NFTs give the power back to the people, like Bitcoin does. And there's some really great altcoin projects out there. There's probably like a good 500 solid ones that actually have valid use case. I'm just throwing a number out there, but most of them are trash. Will I trade them? Yeah. Will I make money off of them? Yeah, because I'm here to make money. I'm not here to do whatever. But at the same time, we don't need most of those altcoins. We really, really don't, because they don't even have valid utility, because they're not doing anything that's really revolutionary as far as that. And the same with a lot of NFTs. So as far as like, we do have to have some sort of cleansing that happens in the market, because this is not going to sustain forever. But I will say is a lot of the terrible projects, they've kind of gone away.
Oh,
like if you're, well, it's not that they've gone away, they're still there, but there's like no liquidity to trade them. So if you're watching this and you're a bag holder, you're going to have to I'm going to give you the hard facts here. You're going to have to get out faster.
Yeah, that's always the tricky thing, right? You don't know if it's this cycle or if it's in 10 years from now. But I would definitely say that with the comparisons I mean, again, I've done the .com comparison in so many ways, you know, whether it's, you know, total market cap of crypto basically equaling the total market cap of the .coms. I think when people, like, if you think, and I traded through this, it's my very start of my career, but people, when the internet stocks were out and people, I was just getting on AOL dial-up. I don't know how many of you guys remember that.
Oh, I remember very, very well.
It was like, I mean, it took you like 5 minutes to get online and then 5 minutes to bring up a web page. But people were like, oh, this is new technology. It's going to change the world. I mean, everything that they said about the internet, which by the way was correct, they're saying about crypto, which I think will be correct as well, but it doesn't stop the cleanse from occurring, and you have to have that cleanse. So again, like we say, you know, we don't know if it's now, we don't know if it's in 5 years or 10 years from now, but investors should be aware, like you're saying, Wendy, that you don't want to stick around in projects that are you want to stick with probably best of breed. You know, I don't know if it was a gentleman or a lady, but they were saying that the market changed. Like, I mean, you know, yes, there was a new use case for these things, but when you look at the market caps, when you look at the charts, like, does it really change? I mean, investors are buying and selling based on fear and greed and the underlying things of this stuff. So I would just dare say is that I mean, a lot of the .coms, like Amazon had a use case, right? Amazon.com, we know it today. I use it. You probably do as well, like almost every day. It had a use case, but it didn't stop it from needing a flush out where it wiped out kind of the crap out there, the .coms that shouldn't have been around. And then it was allowed to rise like a phoenix from the ashes. So I would just point that out, is that you could have the best use case in the world. When fear takes hold, it doesn't matter. Just like when greed takes hold, it doesn't matter. I would say it started in the early 90s, but it really was the last phase was the craziness. That was like 97 to 2000, the last 3 years. And it was just, I mean, this was a period where, you know, you saw people on Yahoo message boards, which was like the first Yahoo chat rooms.
I remember.
And like, you know, people would go on there and post like this penny stock, which had no revenues. It was probably run out of their parents' basement, but they got it listed, and it would go from a quarter penny, you know, it was like a crazy crypto, to like 2 pennies to 8 pennies to $1 to $3. I mean, it was just incredible. And I look at some of the price action that we've seen in some of these cryptos, and it's so identical. And again, there was nothing behind it, but it was just like hot potato, like pass it off to the next person. And the pumping was just kind of going on and on and on. And I think in a weird way, we're in a society now where it's even more pervasive, meaning that you didn't have Twitter in the late 90s, right? You didn't have Facebook yet. And so now you have so much in people's faces about, like, you know, Bitcoin's going to 1 million by year end. And it really has an influence psychologically on people quite a bit. And I think a lot more individual investors are around now. And it worries me that a lot of people will end up getting hurt. If this was a publicly traded stock, they would be required to disclose these agreements, right? It would be required by the SEC. Now, I know in crypto, we love to hate on the SEC, but that's the one kind of issue with crypto, is that without being governed by any sort of bodies, they can kind of keep things hush hush. And it does run the risk of hurting investors who see the headline, oh, they're buying Bitcoin, this is great, let's rush in, but they don't know the underlying details, just like you're saying. So I think that's a very good point. And it could, if you show me crypto that has that full transparency, that is voluntarily being so open. And that's one that I would trust more to invest in. So I agree with you. You just be a little bit careful. You just don't know how this thing ends. And then also, what if Bitcoin does drop to $10,000 again? I mean, that you're basically backing it with Bitcoin, but at the same time, then you do take on the volatility of Bitcoin. And I think that what you're saying there is, if you don't know how something's going to play out, it doesn't mean don't invest in it, but factor in that risk into the amount that you invest in it. And I think that's good. That's a really important. And what you said also, I think, is an important point of how you can change as a trader, as you're a trader, I'm a trader. We're going to get, I look at the daily chart, and every time I get a new candle on the daily chart, I reanalyze it. It's essentially like getting a new piece to a puzzle. And you have to say, okay, does what I thought yesterday still hold true? Do I need to adjust it based on this new, data that I've gotten? And that's why we, like, for instance, someone was tweeting at me the other day. They're like, oh, 2 weeks ago, you said it was going to go to 47,000. And then a couple days ago, I tweeted that Bitcoin would hit 48,250. And it hit basically the second one. And I said, yeah, well, because I got new data from the 2 weeks prior that enabled me to refine my target price. And so people have to understand that, we may say something and then a week later it could be totally different, and you have to, as a trader, adapt. If you don't adapt, you're done. You will lose all your money. So to these people that are mentioning this is that, I was going long here, and then I waited and I sold right here, and then I shorted right here. And these trades, by the way, are all verified on the website, on my website, and I have them on the homepage so people can track them. But it just shows you that, you can be overall, this bigger pattern is bearish. So I am concerned that eventually we're going to break down, but it doesn't mean you can't go long and short inside of a range, and have a view. And again, yes, do I think we're going to head probably down to 20,000? I do think that, but then you know what? I also think we're going to 500,000. So, it's like you have to define your time frames, right? Short term, I'm trading it, I'm in, I'm out, I'm long, I'm short. Midterm, until proven otherwise, this is a bearish pattern. How would it be proven otherwise? I would start to get bullish above this range. And then long term, yeah, if it flushes, I'm just looking to buy. I'll be buying down at 20 or sub 20, sure. Keeping a very close eye on Ethereum, just based on the fact that it's stuck between this trend line, which goes all the way back here, and you can see how it held here, and multiple times. And then basically you're now into the 200 moving average. So you're stuck between these 2 points. This is resistance, but if price can get over that, then you could potentially have a little bit more upside in Ethereum. So again, this weekend, I'll be watching the 200 MA, which is right underneath 3,500, very, very closely. I'm watching Solana. Let me bring up that one. This one's having a beautiful pump. I think there's a chance it could get up to this 200 moving average. If it does it this weekend, I'll probably pull the trigger on a short, because it'll just be a quick, just like, running into a brick wall, you bounce off of it. So if we hit this weekend, which is about $15 away, that would just be a quick short on that side. I think it gets there. I just don't know if it'll get there in the time frame that I'm looking for. For me, and this is a good little technical analysis piece for everyone watching, is like, if Solana goes up like this and then goes, draw that. And then if it goes like this sideways, then there's no way, if it jumps into the 200, I'm shorting, right? Because it's making a bull flag. It has to go vertical. The more dramatic the move, the better pullback you'll get. Because again, think of a ball throwing it against a wall. Like, if you just gently do it, it barely bounces back. If you throw it as hard as you can, it snaps back at you like a rubber band. So that's really important. Timing is very important for a trader. And if it goes straight in, then you expect the big pullback. Other than that, I think Avalanche, let me take a look at Avalanche here real quick. Avalanche definitely is at some resistance right here. You can kind of see. And
I see all the swing wicks, and that that's something I always pay attention to, because if they're really monstrous, like if they're really big, then I'm like, okay, what's going on here? Yeah,
there's basically a battle. When you see a lot of these ones on the downside where they're up, and then the vice versa, it's telling you that bulls and the bears are attacking each other brutally right here, right? And there's no winner yet. The only thing I would dare say is that the more times you hit a trend line, the more likely you break through. So if you look at a trend line, let's just say this trend line here, you come into it, you bounce, you come into it, bounce, and eventually you break through. The best analogy I can give is like, if there's a door in front of you that's locked, and let's say it's a house, and there's a dog in there you want to save, and the house is on fire, you're going to run as hard as you can at the door. On the first hit, probably most of us aren't going to make that door just fall in, right? On the second hit, maybe. Third hit, probably very good likely. And fourth hit, I mean, if we do it as hard as we can, probably finally you break through that door. And the same kind of analogy can be put towards the technical trend line. So the more you hit it, the weaker it becomes. That, you know, in general, people just want to be part of what's moving. They hope it continues, but you have to change your mindset as an investor too. You know, I ask myself, could I have bought it cheaper in the last few days? And if I could, then I say, all right, I'm not chasing it. I like things. When I go to the store, I buy things that are on sale. When I go to the mall, I like jeans that are on sale. I don't go to the mall and say, oh, they just jacked up that pair of jeans to $500 a pair. Now I've got to buy 10 of them. Like right. I mean, that mentality is like a ridiculous mentality to have. And remember this is that for everyone watching is that there's always another trade. You know, I've never done a trade or missed a trade and been like, oh, that was the last trade of my life. I guess, you know, that's it, right? So if you miss a trade, who cares? Because there's going to be one in the next day. If it's not the next day, it's the next day. And you want to buy things that are just beginning their move. You don't want to be that person that's buying at the highs, like on Bitcoin at 68,000, when institutional money was just dumping into it saying, thank you very much. You know, the ETF launched. I was in Dubai at the conference. I mean, it was just, there was so much hype and you could just tell that big money was just so happy to unload there and that the top was in. So never chase. Chasing is like the cardinal sin of investing. Just wait patiently, wait for the next opportunity.